Fintech is about turning over a new leaf by empowering the structure of emerging technology. According to the US Camber, Fintech is a combination of the two words, financial and technology, that defines the development of financial institutions to evolve and smoothly deliver financial services in a newer way compared to the traditional ways. Fintech is defined by the forerunner of technologies as a technology that develops financial services through software that encompasses many different technologies. The primary goal is to empower consumers' demand for financial efficiency. The World Bank, on the other hand, stated that Fintech is facilitating a paradigm shift toward more inclusive and efficient finance and economic development. According to the Global Fintech Adoption Index, nearly two-thirds or 64% of the world's population was using Fintech application in 2019, up from 16% in 2015. The Fintech industry attracted $12.2 billion in investment in 2018, and the top 250 fintech firms collectively raised more than $31.85 billion. KPMG's Fintech Pulse report stated that global fintech investment increased from $50.8 billion in 2017 to $111.8 billion in 2018, more than doubling, with unprecedented number of deals through multiple channels.
Fintech biometrics is used for identity verification and authentication by using a person's unique physical features such as fingerprints and facial recognition. This information is then used to verify the identification of the individual gaining access to the financial service or performing a transaction. For instance, a mobile banking application may use facial recognition to verify the user's identification before allowing account access or processing a transaction. This technique of verification and authentication is regarded to be more secure than traditional methods such as passwords and PINs, since biometrics are unique to each individual and cannot be replicated or stolen as easily as a password. Biometrics can also benefit the financial industry by providing a secure and convenient authentication of identity verification methods for users. Using fingerprints or facial recognition, for instance, can make it simple for users to access the financial accounts without the need of passwords or other conventional means of identification.
Blockchain technology is also an important in finance technology. Blockchain technology allows the entire financial services industry to optimize business processes by effectively sharing data in a more transparent and more secure way. Blockchain technology is quickly reshaping the landscape of financial services as both B2C and B2B consumers aim to gain a more authentic view into their personal and business finance. Blockchain can be really useful in financial and accounting part. Since blockchain is a shared ledger that processes transactions in real time, it has potential to improve accounting efforts by lowering overall costs, which are associated with a regulation of ledgers and freeing up resources. Blockchain can reduce fraud. Hackers have the potential to threaten almost every facet of the financial services industry. However, common forms of fraud such as DDoS attack are significantly reduced with blockchain technology.
The impacts of fintech in society. A rapid adoption of fintech finance technology by banks and other financial services is a result of the emergence of changing technologies combined with consumer demands for a secure and more user-friendly banking experience. Fintech reduces the barrier and increases access to financial services for more people by reducing the cost of providing them. Fintech's ability to encourage financial inclusion will ultimately help to minimize inequality. It also increases the efficiency of market infrastructures, for example, the use of mobile money products and services. Mobile money is a financial development that offers transfers, payments, and other financial services to consumers in developing nations which have inadequate banking and capital markets and low level of financial inclusions at a minimal or no cost. Fintechs have the potential to advance society by fostering financial inclusion and employment growth, as well as through creating social and economic benefits for the global economy. Fintechs boosting competition, providing consumers with more options, and addressing market demand with technological-enabled innovation.
One of the examples of fintech technology are mobile payment service. Mobile payment in fintech can be split up into two categories, whereby the first one are mobile payment that directly link to financial institutions such as QRP developed by banks. The other types are fintech payment that link the user with financial institution to a third party, which is IT companies. Trends of fintech mobile payment service including Apple Pay, Samsung Pay, Alipay, and PayPal. However, all these mobile fintech payment can be further classified into several providers such as HW makers, OS makers, payment platform provider, and financial institution. So, what are some of the requirements or elements of the mobile fintech service that cause it to become a sought after by public? Firstly, mobile payment provide convenience that fulfill customer need while at the same time minimizing billing procedure. Secondly, compatibility. The emergence of fintech are the revolution of the existing payment service and still utilizing the existing financial infrastructure.